Good morning, everyone. Hey, Joe, Ian, Worm, Lonigan, Jiraj, Easy S. What's going on? How's everybody doing? Uh, Running the stops. We're running the stops. So, the curse of Raj continues, and our overnight inventory is, well, it's long and it's getting longer by the minute. Ah, so you can see very clearly that here's the close, and most of the inventory is above the close. We got a little bit of a pullback at the Globex Open, but we could just not get down under that to that 64 area, and then rotation back up. Yesterday, I once again I said we're looking for any kind of backfill to this. The day before, you kind of have to know what got us here. We have single prints in these profiles, which are like big, huge, flashing red lights that show a short position. We have a poor low from yesterday. This is what started everything yesterday, that poor low. That competitive buying down there at 68.30. Just nothing for sale. Straight up. Shorts are trapped here. Shorts are trapped here. Now shorts are trapped underneath the overnight low. And it is still right back to the upside. These liquidations do not last very long. Um, Especially you have a gap down, the gap fills immediately. Now we're left with a gap up again, and it's not even month end. So there's there's the culprit right there, the curse of Raj. Right, every time he says, "Oh, gap up," like just casually, and I'm like, "Stop saying that." So if we were to open here, if we were to open the market here, we would actually have a gap up. That would be, opening outside the yesterday's range. Prices are higher than yesterday. There's a change in business, right? That's why you guys like Delta, right? There's a material change. The material change is nobody needs to sell anything under 68.64. And what we need to worry about for our short sellers, hopefully when we get up to this 69, 12, 13 area, we get some kind of selling. Otherwise, we're going back to all-time highs. And hopefully that doesn't happen this week. Hey Johnny, how you doing? Ah, hey Al, how you doing? How can you identify whether the shorts are trapped on a candle chart? The bottom of the candle. I was on a live stream yesterday listening to someone, and they were showing this really complicated chart, trying to explain to people what's going on in the candle. And I was like, oh, God bless. Why are you doing all of this? The bottom of the candle is where the shorts are trapped. How simple is that? How simple is that? The bottom of the candle is where shorts are trapped. So I'm opening up the YouTube for the Globex session to let everybody in because lately our room guys have been kind of asleep, so we need some more people. So we opened it up. Want you guys to ask lots of questions, right? We want to have some back and forth. the bottom of any candle, Johnny. Believe it or not. Here, I'll show you. I'll show you. Okay? I'll show you. You don't have to just believe me, but I'll show you. Let me see if I can get a half-hour candle chart up. Oh, hang on. Let me open my other instance of Sierra with my trading accounts actually linked. Stay with me. So when you're looking at these candle charts, whether it's a half-hour chart or whether it's a 1-minute chart, the bottom of the candle is where shorts are trapped. We use a half hour in TPO because in Chicago that was the sessions, the half hour. But check this out. This is a half-hour candle chart. I'm just going to get rid of these drawings for a second. Take a look there. Do you see that? So anyone, this is really cool. This is really cool. It's a great question. Anyone who was shorting in this area who didn't have a stop. Now, what kind of traders, other than crazy retail, trade without stops? So crazy retail traders trade without stops because they have no concept of risk management, right? But there are other traders who trade without stops. Size traders don't use stops because then they'll get run. But they have, and because they have to buy back, you can't have like a stop on 1,000 contracts, right? But if it takes out a level that you're looking at and then comes back down to it, you will start buying. And you'll start buying if the price starts moving up. If the offer starts lifting, and this is why I tell you guys to watch the offer, because the bid will follow. Remember Angelo Dundee, kill the body and the head will die? Remember that boxing? Jiraj, you've heard that, right? It's from the 1970s, right? Kill the body and the head will die. Well, follow the ask, the bid will follow. Hedgers, anyone who's got a couple of $100 million and a bright idea, mother truck, right, will short. Now, how do I know this? Okay, I know this to be true. See, a lot of this trading stuff, they've taken and they've overcomplicated it. So you guys pay for software and you pay for courses and they just want to grind as much money out of retail people as they can, right? They just kind of want to put you in the food processor and grind all the cash out of you, right? So they charge you for all this stuff, but it's not necessary. It's completely unnecessary. I know this to be true because I used to, okay, full disclosure, companies will hire me to execute a short squeeze. If they're in trouble and they need to get the price of their stock up, or they have somebody who's a predatory short seller in the deal, something like that. So I'll engineer a short squeeze. And I happen to know that if we bought all the inventory here, right? If we bought all the inventory here and we start taking the market up and we come back down, I'm going to stop selling here to the tick because that's where the cost basis is. This is why you guys have to learn cost basis and inventory because inventory has a cost basis. Now, what does that mean? That just means how much did you pay for your crap? It's the fancy way of saying how much did you pay for this? So when you put it on sale and come back down, you stop selling here and then you lift the offer. That generates buying interest. And then every candle, you're looking to see whether or not those buyers are there. And if they're there, you stop selling and you push up. Now, in the old days, You'd have to do all of this manually. But thanks to automation, you have algorithms that sniff out the order flow, and as soon as those algorithms find size buyers at the bottom of the candle, they shut off the buy and push price up. Hey, Mr. C, welcome to the room. Right? So that's exactly what's going on. And that's how you can see whether or not you should be shorting a market or going long a market or staying the hell out of a market. Right? Because you will just watch the behavior of price here. This is just a sales chart. That's all it is. It's telling you how sales are progressing through the evening or morning as it is here. Right? So we got a little cost basis here. Move up to get rid of it. Put it on sale to generate buying. Charts are very simple. You don't have to memorize patterns. Cost basis, try and sell it higher. Put it on sale to generate buying interest, and then boom, trend right up. It's real simple. And people in the industry, and I like these people because they're my friends, but they will overcomplicate this crap to the point where you're having a nervous breakdown trying to figure out what the hell's going on. And you're losing money. Right? That's why in this room, it is my goal to try and democratize the process of trading education so you guys have an absolute, like you have, there's no gray area, right? There's no, like on a trade desk, one guy is not using fibs and another guy is using, that's not how it works. We all trade order flow. And order flow is just a fancy way of saying customers. So when the customers come in and want to buy, we sell them goods. When they want to sell, we buy the goods. Right? Yeah, we had month-end markup, but now the problem is we had that liquidation. Sorry, it's good that you guys are asking these questions. We had that liquidation. Let me just get rid of all these lines for a second. Just go with a clean bear chart. Sometimes a clean chart. You could see, look at this was the inventory before the liquidation. So we had, and don't mind this because that's because of the time change. It screwed up this part of the chart. So count that as 1, 2, 3, 4, 5, 6. So we had 6 days of people who were long above, what level is this? Let's say 68.50. So when we cracked that low, all of this came tumbling out. And then we had 1, 2, 3, 4 days of liquidation. The other thing that Raj says is that liquidation was calm and controlled, almost deliberate. Accumulation. So what this is when you take out these lows, you have retail liquidation into wholesale inventory. The shorts come and cover here. The shorts are always, they get the cheapest stuff because they're the first ones to buy. Then, so that's short covering. That's smart money short covering. This is wholesale longs, building a position on top. Then they just cut the supply. If buyers come in, gap, and now we're into distribution. And that's how markets work. Now, if you go back and look, where did we drop down to? We dropped down to the scene of the crime, which was this You see this balance area right here? Does anything about this and this, check this out. This is going to freak you out. The same thing that happened here, this liquidation came into cost basis, and what did it do? It stimulated buying. Back up. Liquidation into cost basis, what did it do? Stimulates buying. Now, does that at all seem familiar to this? Liquidation down to cost basis. Check it out, folks. Here's the thing. What happens on these charts repeats themselves. It repeats itself. Whether or not you are looking at a 1 minute candle, just trying to, I'll show you this side by side. Come on, come back here. So let's go take a look. There is your cost basis. Okay. There's your cost basis here. And you had to move up, and then came back down right into cost basis. Came back down right into cost basis. It happens on every time frame, right? Happens on the 1 minute. This is a half hour, right? This is a daily. Do you see how the business repeats itself? It's the same thing over and over and over again. But the people on Wall Street will never tell you that because they want to sucker you into buying products and software and whatever the hell else they can sell you. Oh, here's like a magic hat. You put this on and it's going to make you a better trader. Somebody's going to buy it because people are desperate. People are desperate to make money, and we take advantage of them horribly. Right? It's the same thing. This cycle has been repeating itself since the first caveman sold rocks to the next caveman. Right? There is nothing new about this. The algorithms and all of that, all they do is they make this process more efficient. They don't rule the market, right? So you're hearing about delta sweeps and schmelta sweeps, and I was listening to this person talk yesterday, and God bless this person, they were talking just nonsense, absolute gibberish. I was like, no wonder you guys can't trade your way out of a wet paper bag because so much gibberish is being talked about. Right? It's just a market. We're there to sell crap. Hopefully we could sell it at a higher price. Otherwise, we have to mark down the crap just like any store. You will see this repeat itself over and over again. Don't be fooled. Don't be fooled. And they'll try and tell you, oh, it's because of this. It's interest rates. Yeah. There you go, Ian. It's the same thing on repeat. They just like to make it sound like you need us to figure this out because it's so complicated. You can't do this for yourself. Oh my goodness, you wouldn't want to trade for yourself. You're not smart enough to do that. You didn't go to Harvard, Wharton, right? It's the same thing, right? There you go. Don't chase the breakout. Wait for the correction. Let the offer tell you that there's no supply. Then you go grab some. Right? Stay patient and wait for your setup. So how we trade, now here's where the rubber meets the road. How we trade is where you do that look below and fail of this level. So you buy it here once it's cleared the level. So how do we trade it here? Hang on a second. So you get a balance area, and this is why I keep getting you guys to draw balance areas, because the balance area helps you with the trade, and the trade is just look below and fail. So you buy it here, put your stop here, and then sell it. You know there's going to be a seller here, so you can sell some here. How do you decide high enough is clear? Now there is the concept of experience, Ian. Great question. You just have to do the homework. You have to do the trade over and over and over again. Let's go take a look. Great question. But the trade, you guys understand now, you guys understand the business behind the trade, right? You understand the business reason for the trade? If you're in any trading room and you ask the person who's talking, what is the business reason behind this trade? And they can't explain it to you, like that a golden retriever would understand it, they're full of crap. Okay? If they cannot explain it to you in a simple manner, they don't know what they're talking about. All right? There is a clear business reason for every transaction. If there is no business reason, there is no need to transact. This keeps you out of all this FOMO nonsense that people talk about and revenge trading and all that crap. You wait for your business setup to appear. When that setup appears, you execute with ruthlessness. Right? How do you do that? You have to train yourself. You train yourself to react. So let's see. Hindsight's always 20/20, Ian, but here's the look below and fail. And I do this with you guys every day. See here? This is a look below and a fail. So when it looked below, I would be buying, it's a look below and fail of 87 3/4. I will be buying 88, 89. Well, I won't get 88, let's be honest. Let's go 88 3/4, 89 is where I'm going to be long. I'm going to put my stop here, and then I'm going to sell some here and sell it on the way up. Okay? Good stuff, Mr. C. Think like a seller, you know? I mean, you ever seen that movie Baby Boy with Tyrese? And he goes, look around. Everyone's wearing billionaires, right? You don't want to be a buyer. You want to be a seller. You want to sell. You want to sell size. You want to distribute. All the money is made in selling. Yeah, you got to watch the charts and stick to one time frame. Don't look at 20 or 30 time frames simultaneously. All you should do, when I trade, I just look at the 1 minute candle chart. That's it. The speed at which the offer, yeah, right. The speed of which the offer moves does tell you a lot as well. There's all sorts of little subtle things now, Jiraj. Now that you know what to look for, you're going to start training your brain to see how price moves. And if you are loyal to one market, you'll be able to figure it out much better. Right now, I'm not saying it's bad to trade multiple markets, but if you're starting out trading, just stick to one and get to know it inside and out. Get to know it intimately. So you know when to trade it, you know when to leave it alone, you know when your opportunity presents itself. Right? It's much better to trade one market well than to trade three badly. Don't fall for you know how people go, oh, ES is moving really slow. I'm going to go and trade an NQ. Well, how'd you do? Well, I blew up my account. Didn't really work out. NQ is a very thin market. The order book, you're lucky if you have 6 contracts at every tick. Go look at the NQ order book now, right? It'll be like 1990s supermodel thin. You want a thicker order book because it's more forgiving if you're a beginner, right? Just like you don't give a beginner a race car to drive, you give them a beat up 82 Honda Civic. Yep, London's going to open here. We've got good excess in K period. We have a little short position here at 91. And it's slowly filling itself. See how we came back? There's a little cost basis here. We went and distributed, and now we put it on sale, and look where we are. Oh my goodness, what a coincidence. It's not. There's London. Now, if London can't fill those 2 single prints at 91, let's see if it can. It should. If it can't, it's going to go back up, and we're going to go sideways. And what we're going to try and do is we're going to try and move that point of control, which is what, 1,860 contracts. We're going to try and move that up here somewhere and get good distribution. So if you're waiting for a short, when the London opens, and if say you shorted the London open at 92, put your stop at 93, you put a buy order at 68.90 right here. So if you're short 92, your stop is here, right? Stop, short. This is your target. That's your target 1. If that breaks, this is your target 2, which is the bottom here. See? Very simple, very methodical, right? Single prints filled. Now, if the market can't get down and fill that 90 buy order, what does that tell you? Come on, guys. You're short 92. You got a buy order at 90. That buy order cannot get filled. What is the market trying to tell you? No supply. They don't need to sell at that price. If they don't need to sell at that price, be careful on your short. Exactly. Now, why is it stuck here? Because at 68.90, an hour and a half ago or an hour ago, when the market took out that H high, there's a bunch of people trapped short under 90 because of that J period low. The bottom of that half-hour candle is at 68.90. That's why there's so much buying there. See? Now you get some market intelligence. Right? There you go, Alexander. Would I go long here? No. I'll wait. But this is intelligence you can use. So if I was 92 short and I had a 90 bid in, I might have to buy it at 90 and a half or 91. right? If you've got a larger account, you can kind of wait it out and leave your stop at 83. Now it's coming back down. Let's see. Come on. 90 and 3/4. Well, offer lifts. Watch the red line on the chart, on whatever chart you're looking at. The red line is the offer. We need that offer to come down under 90 and a half. Because right now, come on, let's go. You see on the candle chart how the bottom of these three candles are at exactly the same place and they can't get down to this line? That means that there are buyers front running that level. See? Need that level to crack. 90 half. See? We can't offer under 90 half yet. Let me make that bigger. You can zoom in. There's a 90 half print. Now can we take the offer and there we go. There we go. Finally. There, now you're going to get filled at 90 because it went to 89. Perfect. So you're short 92. Now you cover, say you're short 3 contracts, you cover at least one here. Right? Now we have to wait and see whether this thing will take that low and bring it all the way down to 87. Here we go. Nice. Nice and smooth. Trap shorts from the mini cost basis. If no more buyers come in. Yes, exactly. Exactly, Jiraj. Yeah, we're just looking for the London bid. It's insane how precise these markets are, right, Johnny? It's absolutely insane. It's because of the algorithms and because of electronic trading. A lot of people curse algorithms, and I never understood why. And it's because they're old people and they're used to human beings trading and there's more excess and things like that. So they'd get into a flow of the rhythm of the market. Now with algorithms, you don't need to have a rhythm. And the execution is just so precise. The good thing is we can use very, very tight stops in certain types of market conditions. And our targeting and risk management is way, 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 way better, right? Which means we could do business without having as much expense. Yeah, the level of predictability is much better because of electronic trading. Yeah. Now we're just letting those shorts that are trapped under 89 and a half cover. That's why it dipped underneath that J low by 2 ticks. You can see. Right, there's 1 tick, 2 ticks, and now it's above that area because all of these people who are short underneath are all sticking their buy orders in. Right? And it's drifting lower, but very slowly. Now, is there a trade here? Listen, if you are a gun to the head trader, what your trade would be is long here, stop at 89, and you're targeting 93 and then 94 and then 95. The top of the candles are where the sellers are going to initiate, so there will be selling there when we get back up there. But what I would look for is a look below and fail, because then that gives me the best probability that the trade's going to work, because it comes right down to the bottom of this cost basis and then comes back up. So the sell orders that took it underneath 87 are complete. And then the market goes up looking, and you've cleaned out all the suckers. That's the big thing. For now, we've got an 89.90 bid, Johnny. Let's see. Give it some time. Let them caramelize the onions here. Sometimes you got to wait, especially at night. Sometimes you got to wait a little bit. My best trades always feel like I'm late. I have the tendency to jump the gun and go first, because in institutional trading you had to be first, right? You're either first or you're fired. In retail trading, that's a different story. You have to wait, let the size traders work a level out, and then get involved. You have a much better chance of success if you let the larger traders work out a level. Oh, you got to start somewhere, right, Johnny? Everybody starts out on the sim, right? The sim is good because it teaches us how to use the software. You should be able to manipulate your buy orders and stuff like that without even thinking. If I tell you go put in a bid at 89 half, stop 88 half, you should be able to have already put that in. If I tell you 91 bid, 90 stop, those orders should be in right now. You shouldn't be fumbling around. Right? If I go 91 half bid, 90 half stop, you should be that fast. You guys get what I'm saying? Try it. I'm going to call out levels. See if you can get let's see if you can get your orders in quickly. Right? 91 half bid, 91 stop. 90 half bid, 89 half stop. You need to practice putting your orders in so it becomes a flow. So you're not fumbling around. So and why do we do that? So let's say I go 92 bid, 91 stop. You're filled at 92. As soon as you're filled at 92, put your 93.25 sell order in. It's physical skills, muscle memory. Until you get that Neuralink or whatever the hell he's trying to sell now, Musk, they bury that thing in your brain. Until that is done, you are still going to have the physical act of trading. Right? Now, a lot of traders say, oh, I'm not that fast, or, oh, JJ, you're trading way too fast for me. It's like, no, I'm not trading fast. I'm trading slow. You guys are trading at dinosaur speeds, right? A slow trader is an unemployed trader. Even if you're trading swing trading, you should be able to make decisions quickly and manipulate your software quickly, just in case something happens. Because, let's face it, it's not guaranteed that you're going to get the price that you want. It's not guaranteed that you're going to get the trade that you want. So, and also, not just for trading, but for getting out of bad trades, if we train ourselves to think quickly and act quickly, then we don't have to sit around in bad trades and hope and wish and pray. We have an exit plan. Right? As soon as you are in a trade, or before you take a trade, you should know where the exit doors are. Just like when I got on that plane last week, right? The stewardess pointed out where the exits are, just in case. Yeah, there's one or two in there. If order flow permits, we'll see the overnight high. Uh, yeah, if order flow permits. That's what I do with my coaching students. When I do one-on-one coaching, we will sit there and we'll put in trades, put in trades, put in trades, get used to it. So as soon as you're long, you put in your sell order. You put in your buy, you put in your stop. As soon as that order gets filled, boom, you put in your sell order. So you're in line when the market goes up. Practice it over and over again. Just take the sim and practice it over and over and over again. Where do I have a sim? Let's see. Okay, for example, here, right? So 90, boom. You should be able to put in your orders very quickly. Very, very quickly, right? So 89 bid, 88 3/4 stop, right? You should be able to do it just that quick. Boom. Let's see if we get long here. Ooh, look, the market's running away from the bid, right? So I go 89. Oh, I'm long. Boom. I put my sell order in. Hit flatten 3 times before you put the DOM away. Yesterday I saw on Twitter there's this guy with a prop trading firm talking about how one of his traders left an open order in all night. And their compliance manager caught it and flattened the guy out. The guy would have blown up, the account. Which for me, I mean, I would have fired him on the spot. That's just sloppy. Or I'll pull him off the desk and make him clean toilets or something like that until he repents. Right? You cannot let people get away with that kind of behavior on a trade desk. It's just, you just can't do it. It sounds really harsh, but, any one idiot can take down a firm that's been around for hundreds of years just because of sloppiness and laziness, and none of that has any place in a financial institution. Oh yeah. Yep. So came back into this little cost basis. Dropped back in. Pulled the offer. Just I don't even use right click. It's all left click. Yeah, it's pretty pretty simple. You go put in your bid, put in your stop. If you get executed, as soon as you're executed, you put your sell order in. Boom. Right? Hit flatten 3 times after a trade or after you get out of the thing. Just practice that. Do it 1,000 times. Just do it over and over and over again so you know where everything is. Because when you're trading, especially when you're trading a fast market, you can't stop and think. It has to be, Mr. C, are you in the States or are you here? Right? It's like you ever watch if you watch game film, right? Watch old game film. Okay, US East Coast. Okay, so you know who Lawrence Taylor is. Go Google and watch his YouTube. Watch Lawrence Taylor when he played linebacker for the Giants. Watch guys like Mike Singletary when he played for the Bears. They watched game film so much that they would know where the running back is before they hit the hole. Right? You ever see those plays? The guy quarterback hands off to the running back and the linebacker's there like just like you know like a deranged spirit. That's from watching game film and repetition and running the same drill over and over and over and over and over again. Trading is a physical skill. People don't want to admit it. That's why they want to automate it. But you can't automate what you don't know what you're doing. So learn how to do it manually, just in case the machines break down. Right? Rewind your charts at night. Play your charts back. Play them back at 30 times speed, 20 times speed. Slow it down, speed it up. Get what I'm saying? Exactly. See, that's why they put pilots in simulators. Like, say you were flying and the pilot came on and said, we're going to hit some turbulence and I really don't know what to do. I'm going to grab the book. You guys just kind of hang on for dear life while I figure this out. That's not going to instill a lot of confidence. Training. You have to train yourself to be a trader. They don't teach us these skills anywhere else. So we have to teach ourselves in and out, in and out, in and out, right? Well done, ACS. Cool. If you train yourself to only react when the market does this, you will save 90% of your account. Once you learn how to do this, then you can do this where you go long, stop, sell a little bit. Learn from the edges at first. Purple to green, back to purple. Very simple, right? You take your trades from the edge of a zone when it goes like this, when it goes like this. Long, stop, long, stop. Learn how to do that first. It'll pay off very well. Just keep practicing. but Jiraj, if you keep doing it, it's not going to be so hard. And don't think about it as hard. That's another thing. You guys you psych yourselves out, right? By saying it's hard, it's hard, it's hard, it's hard, right? Like you, Jiraj, you teach people boxing, right? So if I come into your gym and you get me, JJ, go run 3 miles. Well, I'll say, oh, that's hard, right? And if it wasn't hard, any idiot would be able to make money doing this, right? But get that hard part out of your head, just like you would in sports. Don't focus on what's hard, focus on the task. And just leave out the adjectives. Because you guys all psych yourself out. Oh, it's too fast, it's too hard, it's too this, right? Don't psych yourself out before you've even started. You know what I mean? Yeah, of course it's going to be hard. This is only meant for a few people. Why do you think 10% of the population control 90% of the wealth? Because everybody else goes, it's too hard. Yeah, it's a lot of work. Just give me a bag of Doritos and I'll sit on the couch. Right? Dig in. Dig in. The other thing that Ian mentions is very true. If you can enjoy the process, you'll do much better. Now I know that's difficult because everybody wants to make money, but the problem is you're not going to make money until you know what you're doing. It helps if you can enjoy the process while you learn what to do. If you don't enjoy it, maybe it's not for you. If it's like, oh, I hate doing this. Oh, I gotta frickin' figure out these balance levels, and oh, I don't like this, and oh, if you come into the market with that attitude, you're not gonna last because you need longevity, right? You have to enjoy the process. If you don't enjoy it, go do something else. There's lots of other ways to make money. There are a ton of other ways to make money that are a lot easier than trading. So it really helps if you enjoy what you're doing because then you'll retain the information. If it's a struggle, if you're like, oh, frick, this frickin' balance zones, and I got to do all this work, don't do it, right? Don't do it. It's okay, easy. Yes, thank you. Now, I enjoy markets because I'm a mechanic. I like taking things apart and putting them back together. I like taking companies apart and putting them back together. I like taking stocks apart and putting them back together. I like to figure out how markets work, and that's how I think, and that's how it's always fascinated me, and I enjoy the process. That helps learning. Supply position, I think I was talking about people getting short where the supply is. So that is a common thing, Alexander, where people, if you have a back and forth area like this, here's a perfect example. The people who are getting short where everybody else was grabbing supply, when the market goes like that, they're in trouble. See, the purpose of markets is to get people long, right? We want you to buy stuff, come back, buy more, come back, buy more, right? So the purpose of a market is to distribute goods, right? And we're already back up at 95 off of that move. Yeah, you got to do it over and over and over and over again, right? Now, you think about me. From 1994, 95, I did 2 to 300 trades a day till 2012 when I had my heart attack. Okay? When you're trading for clients, when you're working deals, right? So, you know, 17 years, 200 trades a day, phone trades and electronic trades, then electronic. You could see how you get that repetition over and over and over and over again, right? You guys will get it. And I'll tell you something. This business, I've seen a lot of people in this business, thousands of people, over the last 33 years. I'm going to be going on 34 years next year in the business, right? Those who want it badly enough will get it. They will do anything. The things I did, I did favors for people so I could get job recommendations, right? It took me years to work my way onto a spot on the trade desk, right? I didn't go to Harvard, Wharton, and I wasn't recruited by Goldman Sachs. I crawled literally through the sewers of the penny stock world, right? I did favors for people, all sorts of stuff. Yeah, look at that. Order flow did permit. You too, Ian? Yeah, definitely. Look at that. That is weird. Look at that. M period opens right at the top of L. That is so strange. Jeez. Poor high. All right, I will leave you folks. Have a wonderful morning. We'll see you at 9 o'clock Eastern Time. Those of you who are considering joining the room, we've got a lot of exciting stuff happening this fall. We have an AI trading coach, which is out now. Check it out. It's a great source of information. So, when you go to Chat GPT and stuff, it pulls stuff from all over the place. This has been trained with only good, proper information. It's our AI trading coach, and check it out. We have a special, I think, in the room where you get the AI in the room for free or something like that. Give it a shot, or even just try out the room for a month. You'll learn more in a month here. And here's the thing, if you do join the room, don't just join and quit after a month. Reach out to me and tell me, you know, what you need help with, and we'll try and figure that out. Thanks, everyone. Have a great morning. Stay out of trouble, and we'll see you soon. Bye for now.